Market Insider. In pre-market trading, several stocks are making significant moves, capturing the attention of investors. GameStop has experienced a meteoric rise, soaring by 120% and adding to its 74.4% gain on Monday. This dramatic surge follows an online post by Roaring Kitty, the trader who famously ignited the GameStop frenzy in 2021. This marks his first significant online activity in nearly 3 years, rekindling enthusiasm and speculation among traders and investors. The renewed interest in GameStop has also positively impacted other meme stocks. AMC shares have surged by 106%, driven by the heightened activity in the meme stock space. Similarly, Reddit and Robinhood, both platforms integral to the meme stock phenomenon, have seen their shares rise by 4% and nearly 6%, respectively. This resurgence indicates that the community-driven trading dynamic that characterized the 2021 frenzy is still potent. Alibaba has faced a downturn, with its U.S.-listed shares dropping nearly 5%. This decline comes after the Chinese e-commerce giant reported an 86% drop in profits for its fiscal fourth quarter. Despite this significant profit decline, Alibaba managed to exceed revenue expectations, reporting 221.9 billion Chinese yuan, $30.7 billion, against the LCG consensus estimate of 219.66 billion yuan. The mixed results reflect the challenges Alibaba faces in balancing profitability with growth amid a complex economic environment in China and increasing regulatory scrutiny. Home Depot experienced a slight decline, slipping less than 1% in pre-market trading. The home improvement retailer reported mixed quarterly results, with earnings per share, EPS, of $3.63, marginally surpassing the $3.60 expected by analysts polled by LSEG. However, its revenue of $36.42 billion fell short of the $36.66 billion consensus estimate. The discrepancy between earnings and revenue performance suggests that while Home Depot is managing its profitability well, it may be facing headwinds in driving sales growth. Sony saw positive movement, with its U.S.-listed shares increasing by 3%. The company reported quarterly revenue of 3.5 trillion yen, significantly exceeding the LSEG estimate of 2.89 trillion yen. Despite this strong revenue performance, Sony's operating profits were lighter than expected, indicating potential challenges in cost management or other operational areas. The strong revenue figures were likely driven by robust sales in its gaming and entertainment segments, particularly the PlayStation division. Vodafone shares rose by 3% after the UK-based telecom company reported better-than-expected full-year adjusted free cash flow and operating profit. These results indicate strong financial health and operational efficiency, contributing to positive investor sentiment. Vodafone's performance suggests effective cost management and strategic investments are paying off, even as the telecom industry faces intense competition and regulatory challenges. On Holding, the Swiss shoe manufacturer jumped 9% following a robust first-quarter earnings report that significantly exceeded analyst expectations. The company reported an adjusted profit of 0.33 Swiss francs per share, far surpassing the 14 Rappen anticipated by analysts polled by FactSet. Net sales also surged nearly 20%, reflecting strong consumer demand for On Holding's innovative footwear products. This performance highlights the company's successful market penetration and brand appeal in the competitive athletic wear sector. Walmart shares ticked slightly higher after the Wall Street Journal reported that the retail giant plans to cut hundreds of jobs and is asking most remote workers to move to offices. This strategic move is part of Walmart's broader efforts to streamline operations and adapt to the post-pandemic work environment. By consolidating its workforce and enhancing in-office collaboration, Walmart aims to improve efficiency and drive growth in a challenging retail landscape. United Airlines saw a minor decline, falling less than 1% following a summer travel update. The airline announced it expects to have its busiest Memorial Day period on record, with the number of travelers up 10% year-over-year. This optimistic forecast underscores the strong rebound in travel demand as the pandemic recedes. However, it also highlights the operational challenges airlines face in managing increased passenger volumes and ensuring service quality amid staffing shortages and rising fuel costs. Novo Nordisk shares edged slightly higher after the Danish drug maker released new data indicating that patients taking its Wegovy weight loss treatment maintained an average 10% weight loss after 4 years. This long-term efficacy data reinforces Wegovy's potential in the growing weight loss market and supports Novo Nordisk's position as a leader in innovative healthcare solutions. The positive clinical outcomes are likely to drive increased adoption of Wegovy and bolster Novo Nordisk's revenue growth in the coming years. Overall, these varied pre-market moves reflect a dynamic market landscape influenced by a mix of corporate performance, strategic decisions, and broader economic trends. Investors are closely watching these developments, adjusting their strategies and portfolios in response to the latest information as they navigate the complexities of the current financial environment.